Hey everyone, a very good evening to all of you guys. Welcome to the new class on banking system in India. A very good evening to all of you. So I hope you all are doing well, guys, and your preparation is also going fine. Before starting this discussion, would love to know from you all, what is the business model of a bank? What is the business model of a bank? How the bank is earning money? How the bank makes money? By lending and receiving interest, okay? By giving loans out. Difference in interest amount. Okay. So this is a bank. Just give me a second now. Now the bank takes deposits from the general public and the bank is lending loans and advances, right? Let's suppose the bank has given deposit at 6% per annum. So 6% will be the interest expense for the bank, right? And in return, the bank is earning maybe 12%. So that's how a bank makes money, right? That's how a bank makes money. Can I say that a bank is nothing but a financial institution and they are acting as an intermediary, right? They are acting as an intermediary. They accept deposit and they give lending, right? And utilize those deposits for the lending activity. So bank use money coming from deposit and they are lending to some other people, some other entities, and that's how they are able to make money. In other words, I can say the customers that are having surplus are funding money to those who are having a deficit, right? Via bank. This is done via bank, right? Taking deposits and granting loans and advances. That's what a simple business model of every banking entity looks like. There are two types of bank: scheduled bank and non-scheduled bank. By scheduled bank, I mean there is a schedule. There is a list which we call it as second schedule. Which we call it as second schedule. If the name of the bank is listed in second schedule, it will be called as a scheduled commercial bank. If not, we will call it as a non-scheduled bank, right? If the name is written in the second schedule of Reserve Bank of India, then it will be a scheduled bank. Otherwise, it will be a non-scheduled bank. Now, can you guys tell me what happens when you are a scheduled bank? What are the advantages and what are the disadvantages when you are a non-scheduled bank? Over to you. Over to you guys. Okay. So scheduled banks can borrow from RBI, whereas non-scheduled banks cannot. Regulatory body monitors. Okay, scheduled banks, there is a reliability, yes. Credibility, right. There are so many differences, right? There are so many differences. The number one difference will be the minimum capital requirement, right? If you are a scheduled bank, then you need to have a minimum paid up capital of at least 5 lakh rupees, at least 5 lakh rupees. Whereas if you are a non-scheduled bank, even if you are having a lesser amount than 5 lakh rupees, that is also acceptable. The main aim here is the eligibility of RBI loans. You can obtain loan from Reserve Bank of India at specific rates, whereas a non-scheduled bank cannot do so, right? The non-scheduled bank cannot do so. Acha, what about CRR? What about CRR? What do you think? If I am a non-scheduled bank, do I have to maintain CRR? What do you think? Cash reserve ratio, if I'm a non-scheduled bank, do I have to still maintain the CRR? Or I can only maintain it if I'm a scheduled bank? What do you think? If I'm a non-scheduled bank, do I have to maintain cash reserve ratio? And what is the cash reserve ratio? Every bank has to maintain CRR as a certain percentage of the deposits, right? That CRR has to be maintained by scheduled bank, or even the non-scheduled bank has to maintain it. What do you think, guys? What do you think? Both should maintain. No need for non-scheduled bank. Both should maintain. Look, everyone has to maintain CRR. That's a compulsion. But if you are a scheduled bank, you need to keep your CRR with Reserve Bank of India. Whereas if you are a non-scheduled bank, you can keep it internally as well. There is no requirement of maintaining your CRR with the Reserve Bank of India. That's what a different point that you need to know, right? If you are a non-scheduled bank, you need to maintain that CRR internally. You need to maintain it internally within your bank. You don't have to keep it at the Reserve Bank of India. Whereas if you are a scheduled bank, you need to maintain it with the Reserve Bank of India. That deposit will be placed in the Reserve Bank of India. You can't maintain it internally if you are a scheduled bank. So many reporting requirements are there. So periodic reportings need to be submitted by a scheduled bank, whereas quite less obligations are there as compared to the scheduled banks on the non-scheduled bank, right? Now we have so many categories here, like commercial banks, like we have cooperative banks, we have small finance banks. One by one, let's try to discuss them. When we talk about commercial banks, we have public sector banks, we have private sector banks, we have RRBs also. Let's start with the public sector banks, right? Public sector banks like SBI Bank, like PNB Bank, like Bank of Baroda. They need to have a majority stake. Who need to have a majority stake? Government need to have a majority stake. So if I am a public sector bank, that means the government is holding a majority here, right? The government is holding a majority here, more than 50% is with government, right? Is with government. Do you guys understand the concept of holding company, subsidiary company, associate company? Anyone? Do you guys understand the meaning of holding company, subsidiary company, associate company? I'll definitely tell you, but would love to know from you guys first, what is the meaning of holding company, subsidiary company, and associate company? Anyone in the comment section? Tell me then, what is the meaning of holding company, subsidiary, and associate? Those who know, let me know in the comment section. Holding company is a parent company. Holding holds more than 51%. Okay. Look, let me just draw a chart here so that you can understand this concept in a better way. And it can be important as well from the accounting view as well. Okay. From the accounting view also, it is important for you guys to understand what holding company is all about, right? I need some space. Okay. Public sector bank. The government holds a majority stake. What do you mean by majority? More than 50%. More than 50% means majority, right? More than 50% means majority. So if anywhere a company, let's suppose A Limited holds more than 50% of B Limited. This is the chart of B Limited. Okay, this is the chart of B Limited, which is a company. A Limited holds more than 50% of B Limited. A Limited will be the holding company, or we can call it as parent company. B Limited will be called as subsidiary company, right? B Limited will be called as subsidiary company. More than 50%. That's how, if the government holds more than 50% in any bank, that bank is called as public sector bank, right? Public sector banks. Why? Because the government is having controlling interest here, right? They have a controlling interest here. They got a control, a significant control. They got a significant control here, right? There's a significant control. If you are holding majority of the share of anyone, then you can easily control their decisions, right? That's how it works. Now, if I talk about, let's suppose in C Limited, which is another company, A Limited is holding 20% or more than 20%. 20% or more than 20%. But up to 50%. Up to 50%. Are you the majority stockholder? Are you the majority shareholder? No, you are not the majority shareholder. Still, I can say you are a significant shareholder. You hold a substantial part. So that's why I can say C is your associate company. C is your associate company. Why? Because you are having a significant influence. You don't have control, but you have significant influence. The power that you are having in this company is significant, right? The influence that you are having in your company is the significant. So here, A Limited is the holding company of C Limited, but C Limited is the subsidiary company of A Limited. That's what the difference is. Below 20%, you are nothing. Your significant influence comes when it is your holding company, when it is your subsidiary company. Your significant controls come when it is your subsidiary company, right? In both the cases, you will be called as holding company. In both the cases, you will be called as holding company or parent company. What if you are holding 100% of a company? It will be called as wholly owned subsidiary. If you are holding 100% of C Limited, then C Limited is your wholly owned subsidiary. C Limited is your wholly owned subsidiary. If I talk about DICGC, which is a company, right? DICGC, which is a company, it is a wholly owned subsidiary of RBI, right? DICGC company is a wholly owned company, subsidiary of RBI. If I talk about Bharatiya Reserve Bank Note Mudran Private Limited, it's a wholly owned subsidiary of RBI. That means RBI is holding 100% of the shares. Associate company is different, subsidiary company is different. Associate company is different, subsidiary company is different. Associate company means if you are holding 20% or more than 20%, then it will be your associate company. Then it will be your associate company, right, Gargi? The moment you hold more than 50%, now that company is your subsidiary company. Why? Because you gained control. You gained control, right? You gained control. Okay, let me just take a very simple example so that all of you can also enjoy. You will be definitely having a smile on your face. Okay, so let's suppose a boy and girl are in a relationship. A boy and girl are in a relationship. So when they are in a relationship, the girl has gained a significant influence. The girl has gained a significant influence, or vice versa, right? It's not boy versus girl. So it's just a funny example. So the girl is having significant influence. The boy is also having a significant influence. The moment you are married, you both are controlling each other, right? So subsidiary is like marriage. Influence, associate is like influence, right? If you hold 20% or more than 20%, but up to 50%, that will be an associate company. That will be your associate company. But the moment you acquired control in it, more than 50%, that will be a subsidiary company. That will be a subsidiary company, right? So here I can say the government is holding majority of the stake. They have a good amount of control. That's why we call it as public sector bank. That's why we call it as public sector bank. In HDFC, government is not having that much control, but in SBI, but in Punjab National Bank, but in Bank of Baroda, they have a significant control. भाई होल्डिंग और सब्सिडरी सेम कैसे हो सकता है? लेट मी जस्ट गिव यू वन मोर एग्जांपल. आदित्य, प्रतीक and Sureka. Sureka is holding 20% or more in Aditya Limited. Aditya Limited will be subsidiary. Aditya Limited will be associate. Aditya Limited will be associate company of Sureka. Sureka is the holding company because it is holding actually. Holding or parent company. Now Sureka Limited holds more than 51%, more than 50%, sorry, not 51, more than 50% in Pratik Limited. Pratik Limited will be subsidiary of Sureka. Sureka will remain the holding company. Sureka in both the cases will remain the holding company, right? So Sureka in both the cases will be holding company or parent company. Aditya Limited is the associate company of Sureka. I am the subsidiary of Sureka, right? In both the cases, it will be holding company. So it's like just a parent is there and we are child, right? We both are children companies of the same parent. It's just like that, right? Just like RBI is also having so many entities like DICGC, like Bharatiya Reserve Bank Note Mudran Private Limited, right? Okay, perfect. So public sector banks are holding majority, the majority of the stake is being held by the government of India. That's why we call them as public sector bank, because the government is having significant control. When I talk about the private sector bank, just give me a second now. Okay. When I talk about the private sector bank, the majority of the stake, that means more than 50%, is held by the private entities, right? Like HDFC Bank, ICICI Bank. The government is not controlling these banks. Private entities are controlling these banks. Then we have foreign banks. So foreign banks are the banks incorporated outside India, just like Royal Bank of Scotland, which we call it as NatWest. Nowadays we call it as NatWest, right? I used to work in this bank. I was a treasury manager in this particular bank, Royal Bank of Scotland, right? I was dealing in the money market products back in 2022. So it is a foreign bank. It is a foreign bank. Why? Because the bank is actually incorporated outside India. But do we have a branch in India? Do we have a representative office in India? Yes, we do have. Right, in Gurgaon, we do have a representative branch. Real or example? That is a real example. I actually worked with this Royal Bank of Scotland in Treasury. Okay. I was handling the money market desk of this particular bank of some regions. Okay, so this is an example, but the fact that I was actually working is correct. Okay. In 2022, I used to work with this bank. So this is a foreign bank which is incorporated outside India. It is incorporated outside India, but the branches are also there in India. The representative offices are also there in India. I can talk about HSBC, Standard Chartered, Bank of America. All these are the examples of foreign banks. All these are the examples of foreign banks, right? Regional Rural Bank. Can you tell me what RRB is all about? And that's a very simple question, right? What a very simple question. And we have seen in 2025 finance exam that so many questions were there from the static part. So these classes will be of very, I will say, these classes will be playing a very important role for your examination in 2026 as well, because they started asking questions from the static angle as well and not just dynamic. So we already have to prepare both from the static point and from the dynamic point as well. They both will always go hand in hand, right? And today I'm releasing a video as well. Please, all of you, see that video regarding the detailed analysis of finance paper. I have shared some of the important topics for your 2026 examination. I have also stated some of the, I will say, pointers that you need to keep in mind for RBI Grade B 2026. The video will be out soon by 8 p.m. or 9 p.m. by today. Sir, please give that video in English. Apologies, yaar. I've already recorded that video and most of the part is, I think, a mixture of Hindi and English. But in case if you are having any doubt, you can always connect with me. No worries at all. You can drop me your queries in the live classes, or you can just drop me your query on my Telegram channel. I'm always available, so no worries at all. Okay. So we are having so many examples here. Banks that are operating in rural areas, villages, banks that operate in regional levels. Okay. When we talk about RRB, the name is a regional rural bank. Regional rural bank. So we are having so many rural areas in different regions, and that's why we have a RRB concept, right? That's why we have a RRB concept. Now the first RRB was the Prathama Bank. There is a joint ownership in the RRB. There is a joint ownership in the RRB. If I talk about any RRB, the central government has to contribute 50%. Then the state government has to contribute 15%. And there is a concept of sponsor bank. Maybe SBI Bank is a sponsor bank. So SBI Bank has to contribute here 35%. That's how the ownership structure of any RRB is divided, right? RRB means Regional Rural Bank. And the whole idea is aimed at increasing the lending activities to farmers, providing basic banking facilities in the villages. And it is regulated by RBI. The regulator is definitely RBI because it's a bank. But the supervision is of NABARD. And this point is important. This point is important, right? One question that came in examination 2025, phase 2 finance, it was an MCQ based question. NABFID is regulated by which entity? So it's regulated by Reserve Bank of India, right? It's regulated by Reserve Bank of India. If I talk about regional rural banks, they are regulated by Reserve Bank of India, but they are supervised by NABARD. Then we have the concept of cooperative banks. We have the concept of cooperative banks. Now, what cooperative bank is all about? What cooperative bank is all about? The whole idea is to have a formation of a cooperative credit society like structure. So a committee which was led by Mr. Madhav Rao recommended measures to preserve the cooperative character. The cooperative character should prevail. There should not be just financial. Sir, Oliveboard app is not available in iOS. You have to connect with team for that. Okay. You have to connect with team for that. I don't think it is available as of now in iOS. Okay. Still, you can get in touch with the team. They will definitely help you, right? So I'll be taking only finance related queries because there are separate teams for mock test, for your note preparations, for your tech related queries. So definitely they will guide you. Okay. So we need to preserve a cooperative character. We need to reduce financial risk. We need to protect depositors' interest, right? So that's why we have a cooperative bank also. And you need to remember that the committee was led by Mr. Madhav Rao, who recommended these measures. And because of that, we have as of now cooperative banks, right? They are asking questions nowadays in a quite detailed manner. And we have everything in our notes. But the only thing is, if you are targeting your examination in 2026, start reading line by line at least, whatever I'm teaching you in live classes, whatever is there in your notes, and the finance current affairs, and definitely you'll be able to score good in finance. But you need to have an exclusive approach. You need to start mixing the static concepts with that of the dynamic. The preparation will not be separate. The preparation will go hand in hand of static and dynamic. Membership. Member promoted and registered with the Registrar of Cooperative Society. The whole principle is one member, one vote. No profit, no loss basis. Why? Because the whole idea is cooperation. The whole idea is cooperation. Just like we have urban cooperative banks, UCBs. So they are focusing on the savings of the middle and low income groups. That too in the urban groups. In the urban areas, we are having people from the middle class, from the lower income groups. So urban cooperative banks focuses on providing the credit to the weaker section of the society, in developing the savings habit in the middle class and the lower income class in the urban area groups. They are also supporting small borrowers in the non-agriculture sector. Why? Because in the agriculture sector, we already have so many institutions like RRBs. Then they are also having a dual regulation. They are regulated by RBI, but the governance aspect, the supervisory aspect is of the registrar of the cooperatives, right? Registrar of the cooperatives, just like that. In the company side, we have ROC, registrar of companies. In the cooperative side, we have a registrar of cooperatives, right? So the governance, the supervisory functions will be of registrar of cooperatives, but the primary function of banking will be regulated by Reserve Bank of India only. We have some of the rural cooperative banks as well. Again, they are into the agriculture activities like farming, like fishery, like dairy. They are also supporting some of the small scale industries and self-employment initiatives in the rural areas, right? That's what the main purpose is. Now, one of the most important, small finance bank. Small finance bank. Now, this question came in your RBI Grade B examination 2024. It was a para-based question and it can again come, right? Some other concepts they can definitely ask you related to small finance bank. So can anyone tell me what is the difference between a normal bank and a small finance bank? Or you can just tell me about small finance bank. Over to you guys in the comment section. Over to you guys in the comment section. What do you mean by a small finance bank? What do you mean by a small finance bank, everyone? Have you ever heard about the term small finance bank? Like AU Small Finance Bank, right? One of the example is AU Small Finance Bank, which recently turned into a full-fledged commercial banking, universal banking stuff, right? They recently turned to the universal bank. To support the economy, okay. Can you guys be more specific related to small finance bank, what they are actually doing? What is the main aim of small finance bank? Heard of it, but don't know the exact definition. No problem at all, Mayank. To include and help people with no banking facilities, Hema. Okay. So if we talk about small finance bank, they are the niche banks in India and they provide basic banking services. Basic banking services. The whole aim is to serve the underserved. Okay. The whole aim is to serve the underserved, to ensure financial inclusion. Now, there are so many small businesses. There are farmers, there are micro and small industries. If I talk about small businesses, right? We have seen small shopkeepers in different areas. Now, who will serve them? Commercial banks are not interested most of the times. Let's talk about HDFC Bank or SBI Bank. They are most of the times not interested in serving those sectors. Why? Because this sector is highly unregulated, right? Small shopkeepers, different thela walas, lari walas. Now these people are not able to raise money. Why? Because banks are not interested in lending them more and more money because they don't have adequate legal, I will say, documentation or proof of validating their income. But small finance bank is there to finance the underserved section, right? To finance the underserved sections like small businesses. So they give basic banking facilities like deposits, like lending activities. You can also open a small finance bank, but you need to have a minimum paid up equity capital of 200 crore. So if you have 200 crore in your pocket, you can go and open a small finance bank also. Earlier it used to be 100 crore. Now it is 200 crore. The revised limit is 200 crore, can come directly in the examination. And if you have started the small finance bank, that means you are a promoter. You need to hold at least 40% of the paid up equity capital for the 5 years. Let's suppose I have started a small finance bank. The very first thing I need is 200 crore paid up capital. Then for the first 5 years, my minimum shareholding should be 40%. My minimum shareholding should be 40%. I can't liquidate. I can't go below the bare minimum 40%. Why? Because I have to be there in the game. I need some skin in the game, right? And then eventually, if you have, say, for example, 60% holdings, in the initial 5 years, you can reduce it up to 40%. You cannot go below 40% because that's the bare minimum requirement here. You need to have skin in the game. After that, you can reduce it to 30%. After 5 years, you can reduce it to 30% in the next 10 years. And in the next 15 years, you can reduce your shareholding to 15%. So let me just draw a chart. First 5 years, the bare minimum is 40%. Then in the next 5 years, I can reduce it to 30% from 40%. In the next 5 years, that means 15 years, okay, I can reduce it to 15%. Right? I can reduce it to 15%. So that's the bare minimum shareholding pattern that you need to have. If you are a promoter of a small finance bank, that's what you need to always keep. Now I'll advise you guys, these PPTs are good, these lectures are good, but your notes, your short notes is the best. No one can beat your short notes, not even I can, right? So always prepare short notes. कोई भी टीचर आपके शॉर्ट नोट्स को बीट नहीं कर पाएगा. कोई भी बुक हो गई, कोई भी लेक्चर हो गया, nobody will be able to beat your short notes. Prepare this chart in your copy. At the same time, write the minimum capital of 200 crore, and you don't have to spare too much time. Just like I did, I'm having such a bad handwriting, right? Because I'm always in a hurry. Just like you also have to be in a hurry. We need to create that sense of urgency. Draw it quickly in your copy in few seconds, and that's all for the concept. Now you don't have to download this PPT. Even if you have downloaded, you don't have to come to page number 20 and read it again and again. You have each and everything in your copy. You can have a look and you can have an eagle eye view quickly, right? So just before your examination, 5 days before your examination, what do you think? Will you be watching my lectures? No. Will you be watching my PPTs? No. There's no need. If you have a short notes copy. If you have a short notes copy, we can easily be ahead of the 50%, 50 to 60% of the competition, because I have seen people, those who are giving RBI grade B examination, majority of them don't have short notes. Despite of telling so many times, they don't care to make short notes, right? If you don't make it short, then I can say you are already on the losing side. Why? Because it's not practically possible to revise each and everything. Finance is just 50 marks examination, right? We have finance and management. You have management as well. You have ESI as well. You have English paper as well. We have so many things to cover. RBI circulars, SEBI circulars, finance current affairs, so many reports. Without short notes, this exam is a big miss. With short notes, you will be quite organized, I can say, in terms of strategic thinking, in terms of writing and so on. So I advise you guys to prepare the short notes right now. It won't ever happen after the classes. It can only happen along with the classes. Okay. So that's my humble advice. Then there are some prudential norms related to SFBs. There are some prudential norms, like you need to also maintain CRR, you need to maintain statutory liquidity ratio. So no exceptions are there. If you are doesn't matter if you are a small finance bank, you need to keep CRR with Reserve Bank of India. You need to maintain SLR in the approved securities, right? And then we are having some priority sector lending. Acha, before that, can you just tell me what do you mean by priority sector lending? From the name itself, it is very much, I can say, self-explanatory in nature. What do you mean by priority sector lending? PSL. What do you mean by PSL limit, priority sector lending? Quickly, everyone in the comment section. अच्छा, जब भी नहीं समझ में आया ना तो try to break it. Priority sector lending. We have to lend the money on a priority sector basis to some select sectors, right? Yes. In India, we have so many sectors that we need to always make the credit flow, right? Like agriculture is one of them, right? I need to always keep that sector green. By green, I mean money wise. We have MSMEs, we have export credit, we have education, we have housing for poor, we have social infrastructure, we have renewable energy, right? So I always have to pour more and more money, and that's why RBI has released the PSL norms, priority sector lending norms, right? Every bank has to contribute, has to give certain amount of the money as credit in these areas. That's what we call it as PSL. So the earlier limit used to be 75%. Now this is an old limit, very important for your upcoming examination. This was important for 2025, but as of now we don't have this question in the examination, so it is important for you guys for 2026. Earlier the limit used to be 75% for small finance bank. If you are a small finance bank, whatever your amount is, your adjusted net bank credit is, you need to allocate at least 75% of that in the PSL areas. What is the new limit? Let's see how many of you are very well aware about the finance current affairs. Because if you are following finance current affairs series, if you are watching RBI circulars, then definitely you must have covered this one. And this is important for your examination as well, irrespective of the fact that this won't be a circular which came in the recent 8 months just before your examination, irrespective of your fact. It can still come in your examination, despite being an old news. It can still come in your examination. Mayank 60%, Shruti 60%, perfect. Have a look. This circular came in June 2025 related to review of priority sector norms related to small finance bank. On a review, it has been decided that financial year 2026 onward, the current financial year, total PSL target will be 60%. The total PSL target will be 60%. Okay, let me just quickly draw a chart so that you can understand how to make short notes also, right? This is very crucial, guys. Understanding how we have to make short notes is one of the most crucial area. I have to now contribute 60% in priority sector lending, right? I have to contribute now 60% in the priority sector lending. Let's read it slowly. Earlier, what was the situation? I have to contribute 75%. Out of that, 35% should go to some select sub areas as specified by Reserve Bank of India. Right? This was the earlier limit. Okay, apologies. Let's read this one para first. SFBs were required to extend 75% of the credit to the sectors eligible for classification as PSL. So I have to contribute PSL percentage as 75%. Right? I have to contribute 75% for the PSL. Further, out of the 75%, 40% will go to select subsectors. In the PSL also, we are having so many sectors. Out of this 75%, there are certain select subsectors stated by Reserve Bank of India. At least 40%, at least 40% will go to that select sub areas, right? And what will happen to the rest of the 35%? It can go anywhere. From the PSL list, it can go anywhere. It can go anywhere. The rest of the 35%, right? Now, what is the new update? What is the new update here? The additional component of 35% shall be reduced to 20%, thereby overall making the PSL limit as 60%. The new limit will be 60%. Out of that, 40% you need to again contribute in select areas of PSL, and rest of the 20% you need to contribute in any PSL area. This is what you need to remember for your RBI Grade B examination 2026. One of the most crucial topic, right? It doesn't matter. The circular is of June 2025. Still, it can come in your examination. Why? Because it is having that much importance, right? Perfect. So, what is this select area? What is this any PSL area? There are so many areas in PSL. Say, for example, there are agriculture, there is education, there is housing. Some of them are special areas, I can say, right? So at least 40% of the credit should flow to these special areas. Rest of the 20%, it doesn't matter. You can contribute in any area, whether it is a special area or it is not, right? These special areas are defined by Reserve Bank of India. What you guys need to remember is earlier the limit used to be 75%. Out of that, 40% for the special category and rest of the 35% for the all the categories, whether special or general. Now 60% is the overall limit, so they have reduced the limit from earlier 75%. Now it is just 60%. 40% will go again to special areas and rest of the 20% can go to any area in the PSL, right? That's what you need to remember for your examination, and this question can come irrespective of the fact कि ये थोड़ा सा पुराना circular हो चुका है. Doesn't matter, importance बहुत high है, right? It's quite of a high level importance. So please do read it very well and make this chart in your copy. Do make this chart in your copy. Important. How you will make this chart? Clearly right here, 75% was the old limit, 40 plus 35. This is the old limit and this is the new limit. If you want to make it one liner, what you can do is just write 75%, 45 plus 30 in bracket, and now it is 60. Now it is 60 from 40-35 to now 40-20. And this is only regarding the small finance bank, okay? This is only regarding the small finance bank. This is the one liner, this is the chart. Earlier one was the chart. जैसे आपको पसंद हो वैसे आप notes बना सकते हो. These are the two approaches of making notes. I usually prefer the chart format, right? Why? Because chart format, I can imagine the chart in the examination. If I read it multiple times, a line, it will be difficult for me to, draw a line in my brain, draw a diagram in my brain for that line. But similarly, if it is a diagram, I can just understand it like this, and it actually draws a diagram in my brain as well if I read it again and again. There's a diagram in my brain also which will help me remember in the examination. So it doesn't matter how much content you are studying. It matters that how much content you can carry in the examination hall. That's the only thing that matters, right? Result वहीं से determine होगा कि आप कितनी चीजें एग्जाम में ले पा रहे हो. Then the next concept we have is of the payment bank. So over to you guys. What do you understand by the term payment bank? What is the meaning of payment banks and how they are different from other category of the banks? How the payment banks are different from other category of banks? Okay. They can't give credit, right? They can't issue loans and advances. That's correct. So the whole idea of payment banks, it's a new banking model in India, right? But this is a non full service niche banks. Now they formed under the chairman of a committee was formed in 2013 under the chairmanship of Mr. Nachiket Moore. Why? Because we want to enhance the financial services for especially for the small businesses and for the low income household. So whole idea is making payments. The whole idea of this bank is making payments. It's a new category of bank. The maximum amount that you can deposit here is 1 lakh rupees. Definitely you can get your ATM card, right? But no credit cards will be there. Why? Because you can't avail the credit facilities. You can't take credit. This bank won't be able to give you loans and advances. 25% of the branches must be in the unbanked rural areas. That's also one of the feature of payment bank. You can open savings account, you can open current account, no worries at all. But loans and lending services are not permitted to payment bank. And minimum paid up equity capital 100 crore is the minimum paid up equity capital. Can you tell me the paid up equity capital of small finance bank? Anyone? Which we just studied. What was the paid up equity capital of small finance banks? ₹200 crore, right? ₹200 crore is for the small finance bank and 100 crore is for the payments bank, right? Very good, Mayank. As of now, the deposit from 2021, RBI has increased the deposits to 2 lakh rupees, right? RBI has increased the deposit rate. Earlier, it used to be 1 lakh rupee. From 2021, RBI has increased it to 2 lakh rupees. So the new limit will be your 2 lakh, right? The new deposit limit will be your 2 lakh rupees per customer. Earlier, it used to be 1 lakh, but after April 2021, RBI has enhanced this limit. However, if I talk about the payment banks, they are still requesting for a limit of 5 lakh rupees. At least for a 5 lakh rupees, they are requesting it. But as of now, the limit will be 2 lakh only. The limit will be 2 lakh only. They are requesting Reserve Bank of India to increase it up to 5 lakh. But as of now, there is no such update on that. The new limit is 2 lakh only. The new limit is 2 lakh only, right? The new limit will be your 2 lakh. So guys, that's the benefit of always going hand in hand. Finance is not static. Finance, current affairs is not entirely dynamic. They always go hand in hand. The moment you started your finance preparation, you have to keep yourself updated so that you can always, I will say, there should not be any kind of backlog, right? Whether in static, whether in dynamic. I have seen people, they first do static, then they start doing dynamic. It is one of the worst thing. Why? Because you won't be able to do that much content in one go. In case of finance, current affairs, if you try to relate each and everything with static and with dynamic, you will be in a better position. You will be in a better position, right? Then one more limitation is they cannot accept deposits from the non-resident Indians. So from NRIs, they cannot accept deposits, right? Then feature of payment bank, they are required to invest at least 75% of their demand deposit. Whatever demand deposit they got, they have to invest at least 75% of it in the government treasury or in the securities with maturity of up to 1 year. Why? Because this is an initiative where RBI has decided to keep it safe. This is just a payment bank, right? So they need to invest whatever demand deposits they got. At least 75% of that they need to invest in purely government treasuries or securities that have a maturity period of 1 year. Why? Because RBI ensures here keeping it highly liquid. Why? Because the whole purpose is making payments. The whole purpose is making payments. So high liquidity is very essential here, right? And a maximum 25% in current or fixed deposits with other commercial banks. So they can keep maximum up to 25% in the current deposit or the fixed deposit with any other commercial bank. Plus their outside liabilities should not exceed 33.33 times of their paid up capital and reserves. So if we add paid up capital plus reserves and we multiply it with 33.33 times, we'll get the maximum outside liabilities, the obligations that a payment bank can maximum take. That's the max limit, right? That's the max limit. Just like any other bank, they have to also maintain CRR. They have to contribute. Acha, promoter ki 40% wali condition is still there, which we studied in the small finance bank. There also, they have to keep at least 40% for the bare minimum 5 years. There is a subsidiary restriction as well. Cannot establish subsidiary for non-banking financial services activity. So a payment bank cannot open an NBFC company as a subsidiary. That's why I told you subsidiary holding relationship in the very beginning also. Why? Because it's very, very essential for the full-fledged understanding. They can offer zero balance accounts as well. And can you guys give me some of the examples of payment banks? Some of the examples of payment banks. There is a naming convention also. If you are a payment bank, you need to use the word payment bank. After your name, you need to use the term payment bank. Give me some examples of payment banks in India. Paytm Payment Bank, Airtel Payment Bank, yes, perfect. Jio Payment Bank, we have so many examples of payment banks in India, right? We have so many examples of for the payment banks in India, perfect. Acha, then we have the concept of neobanks. Can you tell me what do you mean by neobanks? Have you ever heard about this concept? NEO, neobank. Digital only banks, very good. Digital only banks. When we talk about neobanks, they are digital only banks, right? They don't have any physical branches. They provide all the services by using online and mobile bank service. Now, because of their digital only presence, RBI as of now is not giving any full-fledged banking license to these entities, right? They are not giving banking license to these entities. Why? Because they are 100% digital in nature. So they lack a full-fledged digital license. So if I want to become a neobank, I need to do partnership with any traditional bank like HDFC, ICICI, Kotak, SBI, right? I need to bring some big player, a traditional bank, and by making that partnership, I can launch my own neobank. Why? Because there will be a lack of credibility if you don't have physical branches in India. So you have a lack of credibility, right? So to bring that credibility, they need to maintain a partnership with traditional bank, and then only RBI will be giving you the neobank license. You won't be having a full-fledged bank license due to 100% presence. That's why you need to do partnerships, right? That's why you need to do partnership. And definitely they do have a AI focus, they do have technology focus. Why? Because it is fully digital, right? It is fully digital. So they are famous for their customized and innovative banking solutions. So guys, that's all from mine for today. Thank you so much for attending the session. See you soon in the next class with new concepts. Bye bye, take care, see you soon.